Gordon, you're on top. Why don't you go ahead and start? At least as far as the stock price goes, it's been headed your way in recent months.
Yeah, so I think when you look at Tesla, a company that has a market cap valued at the next 9 largest car makers combined, yet only sells 3% of the cars those car makers sell, to see their deliveries down 18% in Q2 from Q1, by the way, which was flat, I think is a big disappointment. Look, I think objectively, Tesla has lost their product edge. You look at, there's a number of competitors out there who have similar or better real-world range, better interiors, similar or better charging speed, and are just better quality. Consumer Reports ranks Tesla second to last in quality, and British consumer outfit, What Question Mark, says they have among the least reliable cars. So I think the fact that they've lost their product quality edge, their deliveries are declining. We've talked about their market share in China dropping from 17% to 10%, market share in Europe dropping from 30% to 15%. But I think these delivery numbers being down are a big problem for the bulls.
Okay, take it away, Gene.
Thank you, Joe. The deliveries were up 27% year over year. That was a disappointment. Tesla is being impacted by the macro. In the March quarter, deliveries are up 68%. If you adjust for Shanghai, it was up 40, call it 42, 45%, something like that. Still a deceleration from March. And there is no question from my perspective that Tesla is being impacted by the macro. I do have a different perspective than Gordon when it comes to where this ultimately will go, and I'll just pick up on 2 points. The first is this kind of losing momentum. We've had this discussion before. GM, their overall units were down 15% year over year. Surprisingly, they delivered 7,000 EVs in the U.S. in the June quarter. That was down 34% year over year. So we're talking about a 50% growth spread. And I would put it this perspective is, I totally agree. If you believe that in your heart of hearts that Tesla is just another car maker, then it is difficult to get comfortable with the valuation. But if you take the perspective that this is a disruptive company that is going to have higher growth rates in a massive addressable market, I think you can get to a point where they can have, call it, go from 70 billion to 400 billion in revenue over the next 5 years. Just remarkable growth. Remember, Tesla makes cars, but they also make solar. They also are going to get into HVAC. I don't think the robot Optimus Prime should be part of this, but my point is no other car company is doing this. And so I think that to be bound to think about this simply as a car company misses the bigger picture.
You want to come back? Go ahead, Gordon.
Yeah, so, Gina's made this point many times, but I just want to stress 95% of their revenues come from selling cars. The other 5% come from an energy division that had negative gross margins. So to say this isn't a car company, I think is just dead wrong. And when you think about the investment that Tesla's doing, think about this, guys. They did a big, huge, rollout of these 2 production plants, one in Texas and one in Berlin. And weeks later, they're shutting those down. I don't know another car company that has done that. And Gene, again, this company is valued at more than the next 9 automakers combined, yet sells just 3% of the cars they make. So we need to see, hyper growth, substantial growth. The only market they're profitable in is China. They sold 8,000 less cars sequentially in China in Q1, 17,000 less cars sequentially in Q2. So to say that they're growing, that's just not true. So the fact that their growth has now declined and they generate their revenue and their profit from selling cars in China, and that's a big problem for them, I think you have to consider that, Gene. One more thing. To get from roughly 1.4 million cars sold now to 20 million cars sold in 2030, which is the numbers that Gene is referring to, they would literally have to build a 500,000 car plant every single quarter, fully sold out every single quarter from now through the end of 2030. I think we all know that's absurd. So the valuation, again, I think is absurd, and I think you're going to see that reflected as we move through the rest of this year.